Good morning, I'm Steve O'Hare. Welcome to another episode of Talking Bull, and it is Tuesday, the 16th of May. We're going to spend the next 30 minutes running through the markets, talking about what's been going on in the news, what we're expecting over the next 24 hours and beyond, and also take a look at the technicals. More importantly for us, that's where we have our expertise. We're going to run through the cryptocurrency, commodities, FX, indices, and whatever other markets you want to throw at us this morning. So please feel free to jump in the chat and ask away about any markets that we may not cover or you would like us to take a look at and give our opinion on. So let's get started. We're going to look at the headlines. Starting the ball rolling, New York Empire Manufacturing Index slumped to negative 31.8 for May from 10.8 previously, and well below consensus forecast of negative 3.7. This was a very sharp slide in new orders with sharp contraction on the month. There was a similar position for shipments, while unfilled orders also dipped into contraction. There was a slightly slower decline in the rate of employment, while the inflation readings were little changed, with a slightly longer rate of increases in prices paid. Companies were slightly more optimistic over the outlook, while employment is expected to decline and inflation pressures are expected to ease slightly. The EU Commission revised up the 2023 and 2024 forecast slightly, with this year's GDP growth forecast revised to positive 1.1% from positive 0.9%. The 23 inflation forecast was revised to 5.8% from 5.6%, and 24 forecast at 2.8 from 2.5. But Eurozone industrial production declined 4.1% for March after a 1.5 increase the previous month, with a year-on-year decline of 1.4 from 2% previously. The data maintained reservations around the Eurozone outlook. The German economy minister stated that the base growth dynamics of the economy had markedly weakened recently. Bank of England chief economist Pill stated that the bank needed to guard against inflation sticking above 2% in a 4 to 5% range. Latest UK labour market recorded a small increase in the unemployment rate and a sharp decline in employment for the month, while the economic activity rate declined. Headline wages growth edged higher to 6.7% from 6.6%, while underlying growth unchanged at 5.8%. Chinese data, the latest batch of Chinese data was weaker than expected, with the industrial production growth held at 5.6% in the year to April from 3.9% previously, and below expectations of 10.9%. Retail sales growth surged to 18.4% from 10.6% previously, but below expectations of 22%. And the latest US retail sales data will be released today. Consensus forecasts are for a headline increase of 0.8% and an underlying increase of 0.5%. And finally, Canadian consumer price data will be released today. Also, consensus forecast for a headline rate to decline to 4.1% from 4.3%, with the core rate marginally higher at 4.4% from 4.3%. So that's where we are. And let's hit the market straight away. Make me a little bit smaller on this. Bitcoin's really at a crossroads, at a juncture that we're taking into account two potential options. Morning, everyone. Morning, people who are jumping into the stream. Morning, Moch. Morning, Petra. Yeah, but let's take a look at the weekly chart. This is looking or was looking slightly bullish after we broke through the neckline of this inverse head and shoulders formation. The neckline is at 25,400. Now, last week we did have a little skirmish down towards that level, and prices stalled in front of there and reacted higher. So we're sitting around 27,000. It's midway between support and resistance at the moment. The two key levels on the sort of like the more major levels we want to really look at is that 25,400 and also around about 28,800. That's where this previous support now turned into resistance. This big huge band of resistance all the way up to 31,000 and even past that up to 32,400. So that's where we're sitting at the moment on a weekly chart. On a daily chart, it looks weaker. We've got a potential for a head and shoulders top formation. So what we've done, we've broken down through the neckline. This has confirmed the formation, and now we've reacted higher. We've retested the neckline and we failed at the neckline. So we are at a bit of a crossroads from a more of a shorter term to more medium term perspective. The daily chart looking negative for me, and the weekly chart looking slightly more positive. But we only need one really decent move to throw all that into the mix. So from a shorter term perspective, the 4-hour Ichimoku cloud is above us, above price. So we are in a bearish trend over the 4-hour period, and we stalled in front of that cloud resistance. And on the hourly chart, we're actually retesting the slight upward trend that we've got on the hourly basis. So completely mixed bag from Bitcoin. Ethereum, not really much change to that. We've got this really sort of like huge rally we had from the week of the 10th of April all the way up to a high of 2140. The following week just gave up all those gains, and we're back below those levels, and almost a bearish outside candle there on the week of the 17th of April. Since then, we've been lower to sideways on the price action. We've got this previous support area turned into resistance and now acting as support again. So again, bit of a mixed bag there on that. So we'll put it in blue at the moment because at the moment it's providing support. So that's key to hold on to that 1730 level. Remember 1730, we've mentioned it many times before. We flirted with it again last week, got down to 1737 before reacting higher. So that's the level to watch on the downside. On the upside, really need to clear that 2031 level, but more importantly, probably the 2140. XRP on the weekly chart under a bit of pressure. We've got this upward trending support line coming in. This takes us all the way back to early March 2020. Also, the second significant point was at the end of 2020. And since then, we've had multiple points where we've actually hit or stalled in front of this upward trending support. So testing. Right, guys, hopefully you can hear me now. Give me a thumbs up if you can hear me, or just let me know if you can hear me again. My headset's just died on me. Sorry about that. I'll carry on, and hopefully someone will let me know if they can hear me okay. Might not be quite as silky smooth sound as normal, but let's carry on with it anyway. Looking at XRP, as I say,
we're under a bit of pressure here and moving down. Thanks very much, guys, for letting me know. You can hear me. I'd hate to go through this without any you understanding anything I'm saying, or anyway. But let's take a look. I've got a couple of requests at the moment. Aussie 200 on the indices side, which we'll take a look at. I haven't looked at that for a while. But let's jump into gold. This was one of my my gun-to-head trade idea yesterday. Joe went with another market, and I was looking at the weekly chart, really, where we're forming these shooting star candles after attempting to take out the all-time highs. We stalled in front of resistance. 2067 is a high more recently, shooting star that week and last week. So does look like we're forming a bit of a top here, and we've had some dollar strength recently, so that will add to the pressure on gold. Gold for me, longer term, medium term, longer term, still feels like a decent asset to be involved in and be long of, but at the moment we seem to have sort of topped out. So taking a look at the weekly chart and then drilling down to the daily chart, we can see that we've got more of a short-term upward trending support line coming in. Now that comes in at 1993, 1994 today, and the market overnight has sort of sold off, and we have tried to attempt to sort of like take out that 2000 level. We've stalled in front of it so far today, trading at 2007, as you can see, but there is potential for another attempt lower this morning. So on the 4-hour chart, again, we've got downward trending resistance. That comes in today around where the Ichimoku cloud is. That's looking around about the 2028 level up to 2030. And you can see that we sort of have just broken down in this last 4-hour candle and looking to really sort of like retest these, the 2000 and the 1993 level. So on the back foot, as far as I can see in gold, we can take a look at the dollar index. I'm going to dive into it in a minute, but you can see this rally here that's put that pressure on. Let's take a look at crude oil also. We've had the, again, another negative day, or another negative week, should I say, last week. 4 weeks of negative price action. We've got off to a slightly better start this week, where we've reacted higher yesterday. Monday's price action was pretty impressive, made a new low, so took out last week's low, and then has moved higher. Resistance now coming in on the crude oil around 71.75. That's the close to where the high of the day is today, and we're pairing back from there at the moment. On the 4-hour chart, let's get rid of the Ichimoku cloud because sometimes it can be a little bit. Let's get rid of the other levels as well. This downward trending resistance is quite a key level of resistance to look at. This is quite, from a technical perspective, we've stalled just in front of there. That's coming in around $72, so a bit of a psychological level as well. And you can see that Friday's price action, we've stalled at that high as well. So under a bit of pressure, the 4-hour candle, we've posted a bearish engulfing candle on that 4-hour chart and extended lower as well overnight. So looking a little bit under pressure. Brent crude oil, similar sort of price action. In fact, I'd like to redraw this downward trending resistance line. We've got 2 points here, nice, 2 points here, a third point here, or 5 or 6 points, in fact, that this trend line has stalled. And on the 4-hour chart, again, shooting star candle. So that's quite significant, and breaking down, posting a new low that we has taken out yesterday afternoon's lows in Brent crude oil. So under pressure on the crude oil side of things as well. Natural gas is looking a little bit more positive, bounced off those lows around 206, and we're up trading quite close to the resistance. We had that spike higher, remember, from Friday the 28th of April. That got up to 257. 250 should act as a bit of a psychological resistance. See if we can sort of like try and retest that spike. But at the moment, looking pretty positive on nat gas. So let's dive into the FX. Oops. I'm jump to indices straight away. Right, dollar index. I mean, Joe normally takes a look at this, but I'll drill through my timeframes of what I've got. We had this quite tough looking support range that we had below, where we've seen multiple touch points over the last year or so, especially January, the week of January this year, and April the 10th week this year. And then multiple times where we've sort of like got down. We seem to be holding around that support at 101. It's doing a pretty good job. Last week's price action has been pretty impressive indeed. A bullish, we could almost call it a bullish outside candle, slightly more impressive and stronger than a bullish engulfing candle, although we've set back slightly over the last 24 hours or so. 102.75 is the high this week, so that's taken out last week's high. Let's look at the daily chart, and we can see yesterday we paired back. We've had two significant up days, Thursday and Friday, taking out that resistance. We're now coming back to retest that resistance, which should provide some sort of support now around about that 102.38 level. Obviously, as you know, the dollar index is mostly made up of euro dollar. So we'll take a look at how that affects euro dollar, which should be breaking down from the highs around about the 111 level that we've seen over the last few weeks. And we can see we've taken out the support on Thursday. We took out the support at 109.40, and on Friday really sort of like saw off the support at 109.10. Now, yesterday's price action looks slightly more positive. It looks like we're attempting to sort of like, you know, re-engage with this upward positivity. And the next real level of support we should see is probably around about that 108.31 level on euro dollar. We've stalled just in front of there, traded down to 108.45 before reacting higher. On the shorter term charts, 4-hour chart, again, we're below the Ichimoku cloud, that really sort of aggressive breakdown that we've seen, and looking like the double treble top formation looks to have played out quite nicely. The neckline probably to watch is around about 109.10, that 109.10 level that we talked about just now on the daily chart. Now, for me, breaking down through this support is quite key, and maybe a retest at some point today could be a good opportunity to fade into that retest, because as you can see, these double top formations, well, multi-top formations are quite important when you get to after a sort of sustained rally. So overall, looking at potentially selling rallies in euro dollar. Cable has broken through. We've drawn a trend line here, and there's no real sort of like there's the real trend line overall in the market. You can see that we've sort of like, when you break a trend line, you can re-engage it at when it starts to test lower lows. A nice smooth trend line like that around about the 35-degree angle are the, you know, more sustainable. When you get really acute trend lines, they're not sustainable enough. Now, this one has a couple of touch points, so it's not the greatest trend line in the world. It's got one touch point there, and breaking through there, we've retested. But you can see the Ichimoku cloud is sort of doing that sort of trend line job. We've broken down and taken out support, and really sort of like turned slightly bearish on the 4-hour chart in cable sterling dollar. Resistance really should be around about that swing high that we can see here, 125.40. And again, we've had a retest of that level, stalled in front of it, and then reversed sharply lower, and are reversing sharply lower over the last couple of hours. You can see on the hourly chart, we've had another attempt to push higher, but the Ichimoku cloud is doing a bit of a job at the moment. So price action slightly on the front foot in this hour, but it's got a lot of work to do to get back up above those resistance levels. 125.40 on the upside as resistance, and on the downside, looking at around 124.40 as support. Take a little look at do something different. Sterling yen. Let's do sterling yen. It's like takes the dollar out of it because we talk about dollar a lot in the markets. So if you look at this on a weekly chart, you can sort of like see that we have moved aggressively higher. Overall, this is we're going all the way back to 2015. There's a long way to go back to, but you can see that this has given us some long-term Fibonacci levels. We've broken through the 61.8% fib and formed a high around about October last year, and also a high May this year. Now that potentially is a really nice technical stall, and could that be a sign that this rally higher, this impulsive move higher, is looking for more of a retracement to the downside? So still a way to go. On the upside, 172.20 is key. Prices have to remain below there for the bears to feel okay about this. If we do manage to get a break back down below the 155.52 level, then or 155.87 level, then that would form a double top formation on sterling yen. So that's definitely one to watch out for. Right, we've got a few requests from we've got Jacobus asking about Aussie 200. So let's go into the indices now. And why not start with it? You've asked for it. Let's start with it. So Aussie 200, obviously indices have been bludgeoned and then sort of had these amazing rallies. So it's really difficult. These indices are probably one of the most difficult markets to trade. They don't seem to have a lot of rhyme or reason behind them. But straight away, we can sort of like, we can build out on this weekly chart. We can see sort of like the highs from August 21. We've tested on three occasions now, or we've retested twice. We formed the high back there. That's like the all-time high, 7650. Attempted at the start of January 22 and April 22. We've failed to sort of like get to those heady heights this year in January. Had the real big sell-off. We've had the attempted rally higher. But if we just focus on this area here, this is forming quite a nice little potential head and shoulders formation. This is the sort of real sort of patterns that we love and look out for, especially when you sort of get that right shoulder stalling or fading around where the left shoulder did stall. So, and a hanging man candle from that week of the start of May for me is pretty negative. So I know we've got a long way to go before we get excited about this formation playing out. The neckline comes in at 68.75. So looks overall like we have topped out. 7,400. That's the level to watch on the top side, on resistance level. If prices can get above there and hold above there, maybe close above there on a daily or a weekly chart, then there is potential for a retest of that 76.50 level. But lots of ifs, buts, and maybes before we get to that point. So let's take a look at a little bit more shorter term on the Aussie 200. You can see that price action from Friday and Monday was pretty positive, but we look to have given up a lot of that positivity overnight, really, and under a bit of pressure now. So for me, this we're just trading above potentially where would be quite a key pivotal level for me. This 72.30 level where we've flirted with this morning and Monday and Friday, and sort of like previously, even going back to last Tuesday, we had a low around about the 72.30. So that for me would be key. We've had spikes below it and not been able to sustain pressure below it. So if we can manage to break below this 72.30 and close below there on a daily basis, then for me that would say we've probably potentially got a short-term top in place. On the upside, more positive looking, let's try and stay positive, 72.80 all the way up to 72.92. That's the resistance level. Again, if we can manage to close above that on a daily basis, then that would be definitely a lot more interesting and maybe open up a potential approach to that 73.95 to 7400 level. So stuck in this range, 1, 2, 3, 4, 5, 6, 7 trading days or 8 trading days. We've had a close and closes within this well, pretty much 55, 60 tick range. So really looking for a break of that. You can see that price action or the average true range is moving lower. That's a sign maybe that of indecision. Maybe we sort of like don't want to stay at these levels for too much longer, and potentially momentum as well is to the downside. The MACD crossed over to the downside, so under a bit of pressure there. Ichimoku cloud, we are trading above it, so a little bit more supportive. And you can see, let's take that cloud out, and you can see this like really nice solid reaction level that we got. This is like a morning doji star formation on the daily chart, which really led to this up move. So is this just a sideways congestion before the continuation higher or not? Still have to really get that close. Really important to see a close above there for the extension higher. If we don't manage that and we do close below, then think twice about holding on to those longs. Hope that helps from the Aussie 200 side of things. What others do we want to look at? Take a quick look at FTSE. FTSE's been slightly positive since last Thursday, closed higher on Friday and Monday, really sort of like trading around the resistance, coming in around about this level, 78.15 to the top side, to the downside, probably 7700, 7710. That's the level to watch on the downside. A close below there would be quite significant, because we haven't closed below there since back in the start of April. So yeah, under pressure at the moment, but it's had a nice reaction higher since last Thursday's dip low. The DAX is sitting close to those heady heights that we've been trading around, looking at around about the 16,000 level. That's quite key. And if we go back, the all-time high is sitting at 16,300. Yeah, pretty amazing stuff, really, sitting all the way up here when the world doesn't really feel like we've got that growth in it, and we've had so many problems like inflation and interest rate hikes and things like that. So really doesn't seem to be doing what it should be doing. Feels like 2008 all over again, to be honest. So levels to watch on this, maybe look at a bit of the shorter term levels. The 4-hour cloud is acting as support at the moment. Really, 16,000 is the level of resistance above. 15,870, that it would be significant if we managed to close below there on a 4-hour basis. Then we would still have some support, some trend support as well. I'm sure we'll be coming in here. Yeah, I mean, sort of there's quite a big detachment between them sort of levels, but 15,700 is for me the real sort of line in the sand where the bulls have to defend, and it's 200, 300 points away. It's not very far away indeed. Let's take a look at the US markets. Weekly basis, downward trending resistance line, 4 or 5 multiple touch points, hanging man candle the week of the 1st of May, significant downside after that. So really under pressure. 32,900, the support, really needs to get above or clear that downward trending resistance to be positive. And we've got an upward trending support coming in. That comes in 32,685. NASDAQ has performed a lot better. We've had this impulsive move higher, double bottom formation, extended higher. That's hit the measured move target, so that's nice. We've got the resistance. I'd say that's the main level of resistance. If we take the tail out, 13,560, should run into a little bit of selling resistance there. And but yeah, the extension higher seems to be running out of steam, so be aware of that. And S&Ps, we've got the downward trending channel. We've been above it for a number of weeks now, but we are posting these hanging man candles, which makes me a little bit nervous for further upside. But yeah, resistance coming in around about that 4,150 level, support 4,050 level. So a couple of decent levels to watch on that. So that's the indices. Let's take a look at gun to head. Now, let me just dive into what's the best way of getting there. Ideas. We posted the ideas yesterday. So see here, May the 15th. Joe was selling euro sterling. He was looking at selling into the horizontal resistance on the daily chart. And overall, I think this closed on side. So did okay on that, Joe. The 4-hour chart, he's put it on the 4-hour chart. If he had that on an hourly chart, we'd have a bit of a better idea. I think he closed just on side. So happy days with that. And I was shorting gold again. And yeah, that did okay as well. But as you can see in the last hour or so, that's had the breakdown that I was really looking for yesterday. Didn't really happen yesterday. Got down to 2011, and yeah, extended lower today. Got down to about 2002, 76. So yeah, that was what I was looking for yesterday. I was looking for an extension further than that today, but didn't really play out. So that's a bit of a shame. And really, I suppose down to me now to look for another gun to head trade idea. As you can see, the gun to head challenge, which we do. This is where myself and Joe both pick a trade idea. Joe's not on it this morning, so it'll just be me. We place a stop and target. We've got to do this live, so we haven't got time to plan it really. We're just going through, looking at the markets, analysing. Then we hit the trade idea. The risk reward ratio of the trade idea, we insist it has to be 2 to 1 or better. Trades close at 9 p.m. UK time, unless they hit the stop or the target, and we risk 1% of our capital. This is a live account we've had running since the start of the year. Let's try and get it up. Here we go. We're up slightly at the moment. We're up 2%, £2,042. I mean, it's been a real battle this year, but it just shows you how difficult it is to manage a small trading account. We're trying to show, really, what we're showing is what you shouldn't do. What you should really plan these trades out, but we're just using technical analysis as we see on a daily basis, and just trying to sort of like get some sort of sense out of the markets. And but it does show you just how difficult all these things are. I'm going to run through markets, the things I look for. Obviously, some sort of topping formation on the longer term chart, the weekly or the daily chart, and then some sort of confluence with the shorter term chart, like this gold trade idea that I did, which had a weekly weakness, and also running into, I was selling into a rally yesterday, actually, when we were looking at this trade idea. It has broken down. It's sort of like done what I wanted it to do. Getting in now feels like getting in a bit late, so I might have to avoid this. Rally in the FTSE, we're rallying higher in the DAX, EU 50 rallying higher. So it feels like the indices have sort of had quite a nice reaction higher. Let's take a look at other markets. And again, I like to scan all 4 time frames that I like to look at: weekly, daily, 4 hour, 1 hour. Euro Oz. You know what? This looks pretty good to me. So we've got a weekly chart here. We've got the bearish engulfing candle the week of the 1st of May. We've had a sort of like a bullish hammer over the last 2 weeks, one forming now. Yeah, looking at the daily chart as well, we've got the bearish engulfing, which formed yesterday. We've had a reaction higher. So I'm having this reaction higher into the market. 4 hour candle for me is below the Ichimoku cloud. I like to see that. And we're forming a lower high as well at the moment. A little bit of a rejection here. And significantly on the weaker, on the hourly chart, a morning star reversal formation. Now, for me, that looks like 4 time frames significant. So I'm happy to risk 1% of capital on this idea. Let's look at what we can get on. So we want to trade, we want to sell, we want to take profit, stop loss. We want to risk 1%. That's £20.43. We want to get our stop above that swing high there. So around about the 163, let's start with 10 level, see how that plays out. And we want to look at that reversing all the way down to support, maybe around about 106.25. That's nearly 2 to 1. So there we go. Get it on. We've got, oh, it's over a 2 to 1 risk reward. We've just shorted it here. And 162, 80, 180, 60, 163, 10 the stop, 162, 20 the target. So that's my trade idea for the day. Ooh, and nice little formation on the hour chart. I'll try and get that posted up onto the charts, onto the our talking trading view platform. So have a look at that later. So looking forward to what's coming up over the next 24 hours. German ZEW index used to be a great figure. US retail sales later, important. Canadian consumer prices, also important. And events for the rest of the week, not for next week, for this week. Bank of England Bailey's speech, that should be fun. And Fed Chair Powell speech. So that's what we're looking forward to. Thanks very much for your input, guys, today. Thanks for joining in. Thanks for helping me out with the headset, and look forward to seeing you again tomorrow. Maybe Joe will turn up as well. So, yeah, have a good trading day. Be careful out there. Take care.